called as your chapter 6A. Can we? Yes. Okay, great. Chapter 6A is a chapter where they're coming and saying that, Rahul, I want to give you some general deductions without looking at the specific head of income. This chapter 6A is only allowed directly from your gross total income. Assuming you don't have a gross total income, can I carry forward chapter 6A, Rahul? No. Second, they are coming and saying, boss, chapter 6A can only be claimed against slab rate incomes, cannot be claimed against special rate incomes. Even capital gains you cannot claim it against. Okay, so chapter 6A is not permitted against capital gains, winnings and unexplained. All the three are not eligible. You can only claim it against slab rate incomes. Be extremely careful about this fact. After you complete your total income, always go and verify that the total income should bare minimum be your special rate incomes. Then only the answer will tally properly. Yes or no? Yes, this is what the provisions are. Now coming to your chapter 6A, there are two heads of chapter 6A. One is called as expenditure level deductions, and the other is income level deductions. In an expenditure level deductions, which is heading B, the first and the most important one is called as ATC. ATC comes and says that we have certain payments and investments which you can make to claim your chapter 6A. Maximum limit is 1,50,000. In that, the first item is your life insurance policy. If you pay any kind of premium against your life insurance policy, you can claim it as a deduction, subject to the condition that if the policy is taken before 2012, you can claim 20%. If it is after 2012, 10%. But if it is after 2013 and a handicapped person, 15%. Rahul, this is the maximum you can claim. If you have anything more than that, it will be ignored. Now, life insurance policy is not just for you, it can also be taken for spouse. Children or parents are? Children. It is spouse and children. Children and all dependency not required. Parents are fully not eligible. If you are not doing life insurance, then you can do PF. Any kind of contribution made by employee, not employer, employee. Any employee contribution made to any PF, which is statutory PF, public provident fund, recognized provident fund. Okay, all three. And along with that superannuation fund, all these will be eligible for a deduction. Rahul, this is not happening, then you can claim the tuition fees which you are paying for your child education. Rahul, this is also not happening. You can pay any kind of stamp duty charges which you have paid for a house. Rahul, this is also not happening. If you have taken any kind of term deposit for 5 years and more. All these kind of things you can claim chapter 6A up to a maximum of 1,50,000. Next, what is happening, Rahul? If ATC is not helping you out, you have something called as ATCCC. ATCCC comes and says if you have a pension fund, you can deposit money in the pension fund, you will get a deduction on that. Rahul, that is also not happening. I have now something called as ATCCD. Understand the difference? The other one was pension fund, this is pension scheme. That one was pension fund, this is pension scheme. In pension scheme, they're coming and saying, Rahul, pension scheme, two people can contribute. One is I can contribute, one is employer can contribute. If employer is contributing, employer can contribute 10% of my salary. But if the employer is the government, then he can contribute 14% of the salary. Current year amendment, government can be in central and state, doesn't matter. Both. Central and state both. Earlier it was only central, now state is also covered. 10 and 14. Rahul, salary here means basic plus DA forming part. That's all. It is basic plus DA forming part, no commission and all. It's only basic plus DA forming part. Yes, Rahul, if the employer is not contributing, I can contribute. Who am I? Own contribution. Need not be employee, it can be any person. In this, what will happen is, Rahul, whatever I contribute, first 50,000 park aside. Flat deduction. Then they're coming and saying, Rahul, if 50,000 is not helping you out, you can also claim 10% of your salary. Only if you are working. If you're not working, then it is 20% of your GTA. If you're not working, it is 20% of GTA. If you're working, it is 10% of salary. You can claim that over and above your 50,000. Which means one person will get two deductions. Self-contribution, you can get two deductions. Always, as a matter of priority, keep 50,000 as the first priority, then move the balance. Yes or no? Then the provisions come and say, Rahul, if you have ATC, you have ATCCC and you have ATCCD also. All three put together, you cannot claim more than 1,50,000. But in ATCCD, employer will be moved aside, 50,000 will be moved aside. Which means in simple words, it is ATC, ATCCC, CCD, employee contribution 10% rule. Employee contribution 10% rule. All three put together will become 1,50,000. Separately you can claim employer contribution. Separately you can claim 50,000 limit. Separately you can claim 50,000 limit. This is what the rule looks like. CCE. This is what the rule looks like. With me till here? Can we go forward? Yes, perfect. Next is your ATD. Next is called your ATD. This is your medical insurance. In exams, please be extremely careful. If they use the word life insurance, it is ATC. If it is medical insurance, it is ATD. Why am I telling this difference, Rahul? Sometimes in exam, they will not tell you either. They'll come and say insurance, that's all. Now you have to make a assumption. Now you have to make an assumption as to what will happen, because the family will change in both the scenarios. The family will change in both the scenarios. In life insurance, we came and told family is self, spouse, children, full stop. Self, spouse, children, full stop. Here ATD comes and says it is self, spouse, dependent children, any parents. Dependent children and any parents, which means in exam if they are coming and telling you Rahul, life insurance for parents, not eligible. Health insurance for parents, keep in mind. Keep in mind. Yes or no? Yes. Now, when it comes to ATD, the provisions are coming and saying that Rahul, if you have an ATD, you have to prepare two buckets. You have to prepare two buckets. One bucket will sit for me, my spouse, and my dependent children. The other bucket will sit for my parents. The other bucket will sit for my parents. Both bucket will be eligible for 25,000 each. Both bucket will be eligible for 25,000 each. If any bucket has a resident individual more than 60 years of age, that bucket will become 50,000 each. That bucket will become 50,000 each. Now understand, 25,000 is not per person, it is for the bucket. It is for the bucket. So in that bucket, if I am a person who has more than 60 years of age, my bucket will become 50,000. If parents have a bucket more than 60 years of age, parents bucket will become 50,000. Both together will become 1 lakh. Rahul, I am less than 60, but parents bucket is 60, then it has become 75. Rahul, I am also less than 60, parent is also less than 60, 25, 25, 50. That is what the answer is. That is what the answer is. Clear? Yes. Now in this, what and all can I claim, Rahul? The first item I can claim is my health insurance premium. What I can claim? Health insurance premium. Second item I can claim is any kind of payment made to CGHS, Central Government Health Scheme. Central Government Health Scheme. Third item, what can I claim, Rahul? I am coming and saying I can also claim something called as preventive health checkup. Three items I can claim: medical insurance, CGHS, preventive health checkup. The rule is, if you are claiming any kind of preventive health checkup, you can only claim 5,000 rupees for both buckets together. For both buckets together. Rahul, which bucket should I give priority? Look at which bucket is not getting exhausted. Look at which bucket is not getting exhausted. Use that bucket off. You can claim the maximum deduction. Maximum is 5,000. Both the buckets put together. Both the buckets put together. At the same time, they are coming and saying, boss, if you want to make a payment under ATD, you have to ensure that all the payments happen other than by cash. Only one payment is allowed in cash. Preventive health checkups are allowed in cash. Yes. Rahul, I am a senior citizen, but I don't have an insurance. I don't have an insurance. No problem. They're coming and saying, if you are a resident senior citizen, do not have an insurance or not able to take an insurance, whatever expense you incurred can also be claimed. Only for resident senior citizen. Only if you are a resident senior citizen, you can claim the actual expense also. You can also claim the actual expense. At the same time, the last provision of this section comes and says, if you have made a lump sum payment for your premium, the premium will be allowed over the years. Not in the same manner. It is allowed over the previous years in which the policy is in force. It is allowed in the previous years in the policy in force. In simple words, let's say for an example, the policy was taken on 2nd May 2021. The policy was taken on 2nd May 2021. This policy is applicable for 5 years. The policy is applicable for 5 years. In this, income tax coming and saying that, boss, if your policy was applicable for 5 years, then what will happen? The policy will be valid from 21 May. Will be applicable from 21 May, then 22 May, 23 May, 24 May, 25 May, 26 May. Yes or no? Ideally speaking, you have taken the policy for 5 years, but the years is 6. The years are 6. It will be amortized over 6 years. It will not be amortized over 5 years. Please keep that in mind. While the policy is applicable for 5 years, it is spreading over 6 financial years. Therefore, you will be eligible for 6 previous years, which means you have to divide it over 6 years. This is one exception given to you. You have to be extremely careful about this one. Yes or no? Yes, sir. Yes, keep that in mind. Yes. If you have completed what your ATD looks like, then you have something called as ATDD or ATU. 80DD or 80U. This one basically comes and says that, boss, if you are having a handicapped person at home, if you are having a handicapped person at home, it can be either you itself or it can be your family member. It can be either you itself or it can be a family member. Who is a family member, Rahul? It is self, spouse, then. Who is it? You have self, spouse, parents, children, siblings is there. Okay, self, spouse, parents and siblings. These are all the people. If you are handicapped or any of your family is handicapped, then in that case you can get a flat deduction, a mandatory flat deduction of 75,000 rupees regardless of what you spend. Regardless of what you spend. Rahul, I spent only 1 rupee, 75,000. I spent 1 crore rupees, 75,000. Doesn't matter. Doesn't matter. Flat deduction of 75,000. But if it is identified that the person who is disabled is severely disabled, what? Severely disabled, it will become 1,25,000. Rahul, how to know it is severely disabled? Question will come and tell you that. Question will come and tell you that. They will come and say that the person is disabled 80% or more. 80% or more, then it is severely disabled, then it is 1,25,000. Otherwise, it is 75,000. Now, please understand, if I have taken the deduction, then the family member should not take the deduction. If the family member has taken a deduction, I should not take the deduction. One way benefit. One way benefit. Yes or no? Yes. After 80DD, you have something called as 80DDB. 80DDB comes and says that you have a medical treatment for a specified disease. What do you have? You have a specified disease. I have identified that you have a specified disease for which you have to incur a medical treatment. For which you have to incur a medical treatment. Now, if this medical treatment is sponsored by your employer, if this medical treatment is sponsored by the employer, it becomes by salary chapter 4 exceptions. Salary chapter 4 exceptions. Assuming it is not sponsored by anyone, I am making the payment. I am making the payment. They are asking, okay, boss, tell me who are you? Tell me who are you? I say I am not a resident senior citizen. He'll say 40,000 deducted. 40,000 deducted. If you say, no, Rahul, I am a resident senior citizen, 1 lakh rupees deducted. 1 lakh rupees deducted. That is what the rule is. Now, understand, this is not a flat number. This is maximum number. This is maximum number, which means amount incurred or 40,000, whichever is lower. Amount incurred or 1 lakh, whichever is lower. That is what the rules are. That is what the rules are. Yes or no? Yes. Rahul, I have completed my 80DD. After 80DD starts my loans or interest. My loans and interest. 80E comes and talks about my interest on loan taken for my education. Interest on loan taken for my education. If I have taken a loan for doing education, should be an education after 12th standard. Should be an education after 12th standard, which means it should be higher studies. It should be higher studies. It is okay if I take the loan for myself, for my spouse, for my children, or for any guardian student. Or for any guardian student, if I have taken a loan, then in that case, whatever interest I incur on that loan, fully allowed as a deduction for a period of 8 years. For a period of 8 years. Now, please understand, in the question, they'll come and say, Rahul, 1 lakh rupees is what he's made a payment in the current year. In that 1 lakh rupees, he made a payment of 60,000 for principal, 40,000 for interest. You can claim 40,000. You cannot claim 60,000. You cannot claim 60,000. You can only claim 40,000. The principal amount is not allowed as a deduction. The interest amount is allowed as a deduction. Yes, sir? Yes. The next section is your 80EE and 80EA. 80EE and 80EA. In this 80EE is not expected from exam, so let's focus on the 80EA. 80EA comes and says that if you have taken a house, the house should be an SOP house. The house should be an SOP house. If I find out that you have taken a house, it's a SOP house. You have taken the loan between the period 1922, 2122. 1922, 2122. If you have taken a loan between such period, then whatever interest you could not claim under HP, come and claim it here. Whatever interest you could not, understand the carefully, whatever interest you could not claim under HP, come and claim it here, which means if you already claimed something in HP, nothing is eligible here. Nothing is eligible here. It should be an interest more than the 2 lakh rupees. Correct? No. Should be an interest more than the 2 lakh rupees. If you are not able to have claim under HP, you can come and claim it here for an additional 1,50,000. For an additional 1,50,000. The rule is that the stamp duty value of the property should not go more than 45 lakhs. It should be an affordable house. Should be an affordable house. Should not go more than 45 lakhs. If it is happening like that way, then you can claim your 1,50,000 of extra deduction in the current 80EEA over and above your HP. Over and above your HP. In exams, please be extremely careful about this fact. Question is not mandated to come and tell you that you have to claim 80EEA. You need to check whether all the conditions are being satisfied. If the conditions are being satisfied, you will have to give a deduction both under HP and under 80EEA. You have to be careful about that. Be extremely careful. I have never seen questions like that coming in exam, because generally whenever question comes, they always take the stamp duty value more than 45 lakhs. So adanala in the question generally has not come in exam. In case it comes, please be extremely careful about it. Yes. Yes. Rahul, if it is not 80 EE or EEA, you have 80 EEB. You have 80 EEB. This is a loan taken for buying electronic vehicles. This is a loan taken for buying electronic vehicles. In this electronic vehicles, they are basically coming and saying you have taken a loan from 1920 to 22-23. 1922, 22, 23. In that case, you can take a loan for electric vehicles buying, and if you take a loan for electric vehicles buying, whatever interest you pay on that will be allowed as a deduction of 1,50,000. Of 1,50,000. No conditions attached to it. This is what the final conditions are. This is what the final conditions are. Yes or no? Yes. If you have completed 80 EEB, there is no 80F. There is directly 80G. There is only 80G. Now 80G, like I have been discussing, we have 4 categories. We have 4 categories. Category A is called as 100% without limit. Category B is called as 50% without limit. Category C is called as 100% with limit. Category D is called as 50% with limits. 50% with limits. How do you differentiate, Rahul? Category A will always talk about ministers and national. Will always talk about ministers and national. Category B will always talk about Gandhi and Nehru. Gandhi and Nehru, with an exception that Prime Minister Drought Relief Fund falls under Category B. With an exception that Prime Minister Drought Relief Fund falls under Category B. Balance every other ministry falls under Category A. Balance every other ministry falls under Category A. Then you have Category C, which is talking about family planning and Olympics, and Category D talks about charitable organizations. It talks about charitable organizations. These are all your categories. These are all your categories from exam perspective. Yes or no? Yes. Now, Rahul, if you have a deduction, how do you compute the deduction? For A and B, you have no problem. Whatever you have, 100% or 50%. But if you have C and D, they are coming and saying that you can maximum claim a donation of 10% of your qualifying limit. 10% of your qualifying limit. Rahul, what do you mean by qualifying limit? They are coming and saying find the whole total income. Find the whole total income, ignoring 80G. Ignoring 80G. And when I say 80G, I mean all 80G. I mean all 80G. Even A and B is ignored. Even A and B is ignored, which means you will take your whole gross total income, allow for every other sections. Allow for every other sections except for the whole of 80G. Except for the whole of 80G. You will get an amount. That amount is called as qualifying limit. Adukku mela 10%. Adukku mela 10%. That will become the donation amount which you can give. That will become the donation amount which you can give. If the donation falls into category C, you will give 100%. If the donation falls within category D, you will give 50%. Okay, that is what the rules are. Please understand, the 10% of qualifying limit is not the final deduction. It's the final donation. It's a final donation. If the donation falls into category D, you can only give 50% of that donation. Yes, sir. Just keep that in mind. Be very careful about that. Be very careful about that. If then it is happening, then they're coming and saying that, boss, if you want to make any kind of 80G payments only has to happen other than by cash. If you want to make a payment in cash, it has to be only up to 2,000. It only has to be up to 2,000. Anything beyond 2,000 rupees should be happening other than cash. If it is happening in cash, you cannot claim that deduction. Second, they're coming and saying if you want to do an 80G can only happen in monetary terms, cannot be in kind payments. Cannot be in kind payments. Go and tell that I have given furniture and all, not eligible. Not eligible. Then if you have 80G, you also have 80 GGB, GGC. GGB and GGC. GGB and GGC simply come and say you have a donation made to political parties. What parties? Political. You have made a donation to political parties, and in that case, whatever donations you made to political parties will become allowed as deduction. 100% allowed as deduction, subject to the condition that zero cash, full transaction in permissible modes. Full transaction in permissible modes. One payment in cash not allowed. Simple, straightforward game. Yes. Yes. If you have done with 80 GGB and GGC, you also have a section after that called as 80 GG, which is your rent payment. Only for those assessees who are not eligible for HRA. Ignore the provision, not coming in exam. Next, after GG completes your expenditures, moves to the next thing called as income based deduction. Move to the next thing called as income based deduction, where income tax is coming and saying, boss, if you want to claim an income based deduction, what do you want to do? If you want to claim an income based deduction, you have to ensure that you file your return on time. If you miss to file your return on time, no deduction. No deduction. For all these things which I am going to discuss right now, income based deduction is mandatory to have a income return filed on time. Yes. Yes. Coming to that, in that we have the first item called as 80JJAA, one of the most important sections from exam perspective. If at all they have to test you, this is the best way to test it. This is the best way to test it. This basically section comes and says you should be a business person. What should you be? Business person who is liable for tax audit. Who's liable for tax audit? In that scenario, I will come and ask you one simple question. Tell me, have you increased your employment in the current year? Have you increased your employment in the current year? Which means I look at your closing balance of current year versus your opening balance of current year. If the movement is more, then you are eligible. If the movement is less, not eligible. Then I will come and say, Rahul, if I find out that you have more employments, I will now come and ask you to tell me who are your additional employees. How to find out my additional employees, Rahul? First rule, they are coming and saying, boss, he should have worked for more than 240 days in the current year. Should have worked for more than 240 days in the current year. Rahul is not worked for more than 240 days in the current year. Bring last year's 240. Bring last year's 240. When I say bring last year's 240, meaning last year they did not satisfy 240, current year they'll become eligible. Rahul, okay, condition satisfied. Next, your salary payment should not go more than 25,000 per month. 25,000 per month. Rahul, how to calculate per month and all? I say I will come and do. They'll give you monthly salary only. They'll give you monthly salary also. Rahul, it is more than 25,000 per month. Ignore the employee. Rahul, it is less than 25,000 per month employee. Consider him. Rahul, 240 days would a condition. Can it be come down? Yes, you can bring it down to 150 days if it is manufacturing of leather apparel industry. 240 will become 150. How much? 150. Rahul, that employee also has now become eligible, which means the employee has satisfied more than 240 or 150, employee is satisfied more than 25,000. Then I'm coming and saying, if that is the condition, tell me how did you make the payment? I'm coming and saying, Rahul, I made the payment by cash, not eligible. Rahul, I said, no, I made the payment by bearer check, not eligible. I made it by cross check, not eligible. What do you want? Permissible modes. You make the payment by permissible modes, eligible. Don't make the payment by permissible modes, not eligible. Yes or no? Rahul, employee 240 days satisfied, 25,000 satisfied, payment made by permissible modes. Now what to do? Take the salary of that employee for the current year, multiplied by 30%, that is what your deduction is. What? Take the salary of the employee, multiplied by the 30%, that is what your deduction for the current year. This deduction of current year will just like that be carried forward for the next 2 years also. Which means 30% you claimed in the current year, 30% in next year, 30% third year. Simple logic. Straightforward. Yes. Instead of reading so many provisions, you can directly read the step formula. This step formula will help you answer the whole section. At the same point of time, please understand, it's not tested in exam, but just to clarify to you, if the question also comes and says that the employees which you have are casual employees. What employees? Casual employees. Then also they are not eligible, because casual employees are generally not liable for PF. There is one hidden condition somewhere where they are coming and saying, if the employee is not contributing to the PF, or the employee's PF is being sponsored by government, not eligible. Yes or no? So please be careful about that as well. Yes. Great, perfect. After you complete 80JJAA, you have two more income sections. One is called QQB, one is called RRB. Both are royalty. One is royalty for invention, the other is royalty for books. The other is royalty for invention. It doesn't matter what royalty you have, both royalty are eligible for a deduction of 3 lakhs. But the condition in this 3 lakhs is that you should get the money in India. Rahul, you are paying the money outside India. Get the money in India within 6 months. Rahul, I did not get the money within India in 6 months. Not deduction eligible. Income will be offered. Mandatory. Income will be offered, but the deduction will not be eligible. At the same time, they are coming and clarifying that, Rahul, if I am receiving some money like that, if it is recurring payments, what payments? You can only claim 15% of the number. 15% of the books sold is what your royalty can be eligible for. If it is anything more than that, ignore the number. It is added to your income but never claimed as deduction. If I remember one question properly, the question was, you have a royalty of 2,88,000. Which is 18%. Which is what? 18%. Income tax will come and say, boss, add the 2,88,000 on the top, but when you claim deduction, you can only claim 2,50,000, which is the 15%. Now in this 2,50,000 also, the question came and said, what came to India is only 2,40,000. in 6 months. So therefore the income will now become, sorry, the deduction will now become 2,40,000. Then also they came and said that boss, in the person when he incurred the royalty, he also incurred 40,000 rupees as expenses. What he would have done? This 40,000 would have been allowed as a deduction in IFRS. This 40,000 will be reduced here also. Will be reduced here also. So therefore 2,40,000 will become 1,90,000. So the final deduction you can claim is only 1,90,000. But the amount which you would have offered as income would have been 2,88,000 minus 40, 2,48,000. Yes or no? Yes, there is one question like this. If you have not done it, please do it. It's there in the study material also. Okay, if it is not there, it's there in my book also. Just work it out. Okay, 2,88,000 has become 2,48,000. Income is offered as 2,48,000, but the deduction which you granted is only 1,90,000. Income which you granted is only 1,90,000. Please be extremely careful about these kind of questions. I've seen questions coming in the full-fledged answers. Done. Yes. Great. Moving to the last heading called as heading CA. The heading CA only has two kind of sections. One is ATTTA, ATTTB. This ATTTA and TTB comes and says that if a person is earning interest income, what income? Interest income. If a person is earning interest income, then the interest income can be claimed as a deduction subject to a maximum of 10,000 for TTA, 50,000 for TTB. TTB is applicable for resident senior citizens. In ATTTA, you can claim only on savings and post office savings. In ATTTB, you can claim for any deposits. You can claim it for any deposits. So therefore, in exam, if you see the heading called as post office savings will first get an exemption of 3,500. Then they will get a deduction of 10,000 or 50,000. 10,000 or 50,000. If it is any other kind of incomes, you will get a no exemption under IFRS. Then you will get an exemption of 10,000 if it is savings and 50,000 if it is any person. 50,000 if any deposits. Yes, sir. Can you imagine it? Yes, great. Ending this chapter of chapter 6A with clarifying of 115 BSc, which comes and says that if you are opting for 115 BSc, motto chapter is not eligible. Motto chapter is not eligible. Only two items are eligible for you. One is employer contribution to NPS, which is 80 CCD subsection 2, which is nothing but 10% or 14%. That is option number 1. Option number 2, you can claim 80 JJAA. You can claim 80 JJAA. In the ரெண்டு section மட்டும் நீ claim பண்ணலாம், அது தவிர ஒண்ணுமே claim பண்ண முடியாது. Yes or no? Last, after your step number 8, in your step number 8, you have two options. One is chapter 6A, the other is 10AA. Without even moving the chapter, I'm going to tell you in 5 seconds. The chapter 10AA comes and says you have 3 slabs. For the first 5 years, 100%. For the next 5 years, 50%. For the next 5 years, 50%. Rahul, what am I talking about? I'm talking about 100% of export profit, 50% of export profit, 50% of export profit. Rahul, how do I compute export profit? Take the profit of the undertaking. Take the profit of the undertaking multiplied by ETO divided by TTO. ETO is export turnover, TTO is total turnover, which means it is profit of the undertaking into export turnover divided by total turnover. The only thing which is to be kept in mind in this chapter is that profit is of the undertaking, not for the company as such. Not for the company as such. It is only for that respective undertaking. Balance any other undertaking will be fully taxable. Keep it separately. Should not be part of your ETO and TTO. Should not be a part of your ETO and TTO. Second thing to keep in mind, whenever you read about the word ETO, provisions are coming and saying that ETO means, hey, lose it. ETO means any kind of turnover which is brought into India. No condition given. No condition given. Just said brought into India, which means if you have made any kind of payment like telecommunication, freight charges, this charges, that charges, anything which you paid outside India, that money will be reduced from your ETO. That money will be reduced from your ETO. If the question comes and says, Rahul, the export turnover is 1 crore. I have paid 1 lakh rupees as freight charges which is paid outside India. Your export turnover now becomes 99 lakhs. Your export turnover now becomes 99 lakhs. With the second condition where they're coming and saying, if you have ended up reducing something from your export turnover, it will also be reduced from your total turnover. It will also be reduced from your total turnover, which means when you're computing a total turnover is 1 crore plus some number. That will now become 99 plus some number. That will now become 99 plus some number. That is what the section says. What are the section? 3 things. First 5 years, 100%, 50%, 50. Both 150 is for export profits, which means profit of the undertaking into ETO by TTO. ETO means remove all the expenses paid outside India. TTO means remove all the expenses paid outside India only if it is removed from ETO. Only if it is removed from ETO. Yes or no? This is the section. This is what the chapter comes and tells. And from 115 BSc, Not eligible. From 115 BSc, this is also not eligible. Yes or no? Yes or no? Great. This marks the end of your section, step number 8, which means now you have also computed your total income. You also computed a total income, and then on that you have paid taxes, and you have completed step number 9 and step number 10. Step number 9 and step number 10. There are some small 2 chapters which are pending in the very last, called as unexplained income and agricultural income. What is this unexplained income, Rahul? They're coming and saying in a simple word in exam, if they come and say that you have some income or you have some expense for which assessing officer is asking you for explanations, is asking you for explanation. You give him the explanation, he is not satisfied, unexplained income. You don't give explanation, unexplained income. That's all, chapter over. That's all is the chapter. Any kind of income, any kind of asset, any kind of investment, any kind of expenses, assessing officer is asking for reasons. You justify the reason, he is happy, good for you. You don't justify the reason, unexplained income. You justify, he is not happy, unexplained income. Take all the incomes, no deduction of expenses, directly tax at the rate of 78%, no set off of losses, no set off of basic exemption limit. Chapter is over. That's all. Yes. Last chapter is your agricultural income. This chapter basically comes and says that if you have any kind of agricultural income in India, it is exempt from tax. If you have any agricultural income outside India, it is fully taxable. How do you find out you have an agricultural income in India, Rahul? They're coming and saying the income should come from a land in India. This land should be an urban land, rural land. Correct, Danda. This land should be an rural land. How do you find out a rural land, Rahul? It should not be an urban land. Same provision as capital gains. Same provision as capital gains. So you should have an income from an rural land in India. This income can also be from a activity which is necessary to make the product ready to use, like threshing, thrashing, hitting, killing, whatever you call it. Okay, all things. Any kind of activities which is ready, necessary to make the product fit to sell in the market. Fit to sell in the market will also be considered as an agriculture income. At the same time, if you are renting out this premises also, it is agricultural income. If you are renting any kind of warehouse in this process also is agricultural income. The one thing which is also an agricultural income, although it is not a land, is a nursery saplings. Yes, any kind of saplings grown in a nursery. What? Nursery. Any kind of saplings grown in a nursery will also be an agricultural income, even though it is not on a land. Even though it is not on a land, this is what is an agricultural income. Now, income tax is coming and saying that, boss, if you have an agricultural income, you also need to come and tell me how to find out the PGVP income and how to find the agriculture income in case of a composite income. In case of composite income, income tax is telling that, boss, I have given you 3 items which I don't like. One is tea, coffee, rubber. If you have any kind of incomes from rubber, your PGVP income will become 35, agriculture will become 65. If you have an income from tea, agriculture will become 60. Agriculture will become 60. PGVP will become what? KL. Yes. If you have coffee, in coffee there are 3 words and 2 words and 4 words. If you have 2 words, it is 25 and 75. 25 is PGVP. Always the lower is PGVP. Always the lower is PGVP. 2 words, 25 will become PGVP, and 4 words, 40 and 60. 40 and 60. Rahul, what is this 2 words and 4 words? It is grown and cured. The other is grown, roasted, cured. One more. Grounded. One more, grounded. Some 2 words, some 4 words. It doesn't matter. Okay. If you have 2 words, it is 25, 75. If it is 4 words, then it is 40 and 60. Which one is the lower? PGBP is the lower. PGBP is the lower. Rahul, in this case, assuming it is not the 3 cases, it is any other case like sugarcane and all those things. Assume what you will do is you will take your product and you will sell it to your factory. At what price? Fair market value. So what you will do is you will take the cost of your product, you will complete your whole cultivation, you will sell it to your factory for FMV. That number will become agriculture. Since you have sold it at FMV, for your factory this has become cost. Yes or no? Yes. On this they will do further production and then they will sell it the final product outside. That income will become PGBP. That income will become PGBP. In simple words, you will do your process costing. From one process to another process, the difference will be FMB from here and FMB from there. My FMB of sales will become their FMB of cost. My FMB of sales will become their FMB of cost. Simple, straightforward answer. Yes or no? Yes. If you are done with all this, in step number 9 and 10 will come a change. In step number 10 and 9 will come a change, because now you have to compute tax on your agriculture income using something called as partial integration, which means agriculture income is not exempt from tax. Agriculture income is partially integrated in tax. Agriculture income is partially integrated in tax. Rahul, what does this mean? They're coming and saying, boss, if I find out that you're a slab rate person, who are you? If I find out that you're a slab rate person and your agriculture income in the current year has gone more than 5,000, agriculture income in the current year has gone more than 5,000, I will call you as a partial integration person, in which case what I will require from you is, I will want you to first compute tax on all income assuming agriculture income is taxable. What? I want you to compute tax on all income assuming agriculture income is taxable. Then I will come and say, you do one thing, you take the agriculture income and add it to your basic exemption limit, and then compute tax on that also. Which means step number 1 is computing tax on total income plus agricultural income. Step number 2 is computing tax on agriculture income plus basic exemption limit. You have 2 taxes. 1 minus 2 is the answer. 1 minus 2 is the answer. Now please understand, in this when you do it, step number 1 should be done till cess. Step number 2 also should be done till cess. Step number 3 is 1 minus 2 directly. Step number 3 is 1 minus 2 directly. No cess and all before. It will always happen after. Complete the whole step number 1 till the final answer. Complete the whole step number 2 till the final answer. Get the minus of both, and that is what your final answer will be. Yes or no? Why is this happening, Rahul? The reason is happening is because agriculture income is making your slab change. Which means if you find a question where the slab is not changing, forget the partial integration. Everything is exempt. At the same time, if you're not a slab rate person, if you're a flat income tax rate person, then anyway partial integration will make no sense. Therefore it is exempt fully. The one thing which is to be kept in mind is, if you are in composite incomes, income tax comes and says that when you're trying to claim depreciation, what are you trying to do? You're trying to claim depreciation. Now you know that the depreciation on the building which you have is 10%. But you know that 40% of that has become PGBP income and 60% has become agriculture. Can you come and say that, no, Rahul, depreciation in Puerto Rico, only 40 I will reduce from my block? No. They'll come and say, reduce the whole 10%. In simple words, whenever you're trying to find out your closing block, whatever depreciation number you computed, that number is the final reduce. That is what the number is. Simple as that. Yes. Which means if it's a personal nature item, then you would have anyway reduced the depreciation. So which means that will be reduced from a closing WDV. But if you have any other agriculture income, you would have anyway taken the full depreciation, and the number will take care of itself. 40, 60 will take care of itself. Depreciations individually you wouldn't have split. Yes or no? So whatever depreciation you computed, directly reduce it off and close the answer. Yes or no?